9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open up markets in Greater China. Let's get to your top stories today. Asian tech shares rising after this report that Samsung plans a significant hike in memory chip prices. Now, Taiwan stocks also in focus as NVIDIA supplier Hon Hai reports a 40% jump in quarterly sales.
Oil prices dip after OPEC Plus announces a modest output increase once again, while more oil and gas tankers find ways out of the Strait of Hormuz.
And Hong Kong regulators intensify scrutiny of IPOs to ensure the equitable distribution of shares, and that's ahead of a busy week of listings with 15 companies debuting here in the city.
All right, we're still waiting for that big match in the World Cup here right now, right?
Yeah, like one. My Bloomberg terminal is down. You take care of business. I'm
okay.
on World Cup.
In the meantime,
it's a quiet markets day, though.
It's a quiet markets day, and as we wait for this big match that's
Yeah.
happening in Mexico City, of course, we're going to be talking a lot of things about the week, right? I think it's going to be a big, big week for Korea. Specifically, we talk about Samsung earnings coming out.
Yep.
You have SK Hynix in this ADR listing happening at the end of the week. And, of course, the won trades 24 hours.
Yeah, starting today. And I think context on the Samsung earnings, right? The last time it came out with earnings was when we got that massive adjustment down in valuations because of just how crazy good that number was. And I think when you look at what's going to happen tomorrow, I think is when the earnings actually come out. Do we get that further validation of this AI trade? And of course, you have to sort of consider this price hike that's being reported too.
Yeah, does it add a little bit more in this whole Korea trade, right? At a time when the market is questioning the sustainability, now that you have the likes of Meta, for example, when it talks about renting out excess capacity or excess compute, that certainly does lead to a lot of questions about the hardware side of Asia and its suppliers. So certainly, at least today, you are seeing Samsung shares doing quite well. And does it actually add potentially this ADR listing for SK Hynix has actually helped ways to boost the won in particular as well?
It depends what they do with the money, I guess.
Exactly, $29 billion.
If they take that all the way back home in terms of the proceeds of that. And it just really comes at a time when I think when you look at SK Hynix, for example, right? It's coming at a time when by the way, we just hit 100 billion in outflows out of Korean markets year to date, right? So this exodus out of Korea, not out of Korean longs, by the way, I should mention that, right? Because this is another way for foreign investors to now get their hands on one of the hottest stocks in the world without having to go into the local Korean markets, right? So we'll see what happens with this. Separately, but related to the story, is obviously what's taking place in Taiwan. And I think Hon Hai there, as a proxy to the AI trade, just came out 40% pop in revenues, and we'll see, of course, what happens with the stock. It should be up and running at this point in time there, too.
Yeah, I mean, certainly really punchy numbers coming through here just to show and underlines the AI demand that we still see in this part of the world. And I think Marvin Chen from BI had a great report talking about Taiwan itself, right? It seems like the narrative does change now of some of the North Asia sort of markets. They're no longer just the proxies of U.S. markets now. They're actually doing their own thing. And the fundamentals certainly show that.
Yeah, and I think the bias is towards Taiwan more than it is Korea. And I think Citi came out with its latest note there on Korea itself. That's all to say, of course, lots of things to watch, of course, in these two markets. Here in Hong Kong, it's also going to be very, very busy. We have 15 listings taking place here in the city. It's against the backdrop of still, obviously, very busy deal activity. But this reporting that we're doing, we'll get more details on this in a moment. This pivot in terms of the scrutiny on the book building process. We'll hit the nuance on this in a moment here, in as far as what the regulators are looking at specifically going into, of course, a very busy, as you can see, trading week here as well. A lot of sectors to watch. We'll get into that later on. And, of course, I'm just also watching what's taking place in the World Cup and whether or not it's actually started. Brace. This match was delayed by about an hour, so this is England against Mexico. Yes, we are about third minute into the match. 0-0 so far.
80,000 people? Is it? That's the capacity of?
80 plus.
80 plus.
But this was the same stadium back in 86 that actually had about 110,000.
Wow.
But that's a different time. But yes, this is something we'll be tracking, obviously. And in case you need an update,
dual screens now, right? You
Yes.
want to watch World Cup? You can also watch the China show.
Dollar yen.
We get it.
And I have the World Cup here now.
All right.
Yeah.
Let's talk a little bit more about Samsung, right? What to expect here. Its plans to raise DRAM prices as well and bring in our Sang-mi Cha, our Asia equities reporter, on what could be in store this week. Sang-mi, we'll talk about when it comes to prelim earnings for Samsung. What's expected?
Yeah, this week is going to be a super week for Korea. We have the Samsung preliminary earnings, and we also have the SK Hynix U.S. listing on Friday. For Samsung, we're going to be expecting just two numbers, the revenue increase and, of course, the operating profit. Just like you said, operating profit is expected at about $55 billion. And that, as you can see in the chart, actually is more for this June quarter, is more than what Samsung has made for the entire 2025. So this is very significant there. It does point to how the memory shortage is still here intact. And the investors are watching this because they have come against, all these global chip makers have come against this turbulent June when, they have had the best quarter profits altogether. But then June was quite turbulent when it comes to the stocks itself because, there were concerns over the overcapacity and also the competition. Apple knocking on the doors of Chinese suppliers also worried some of these memory makers like Samsung and SK Hynix. So it is a very important timing, and it is also important to see whether the DRAM prices and NAND, how they're going to continue, because any reduction in those prices that we have been seeing continuously rallying, it will also point to some of the momentum fading.
The other name, obviously, is SK Hynix. Sang-mi, biggest ever share sale by a foreign company, quite some big numbers. I mean, it looks like the underwriters are also going to be getting quite a bit of this given the reporting that we've seen so far. Walk us through why this matters beyond just the actual deal, Sang-mi.
Yeah, so we're looking at a $29 billion share sale here. And when it comes to payouts, they're looking at about 0.5%. And that, again, to the banks, it is quite big for an Asian company this year. To put that into context, U.S. companies originally in IPOs for large IPOs in the U.S., they pay about 1%. So it is still smaller, but still for Asian company, it is quite significant. And again, it comes at a very important time. The whole point here is the access for U.S. investors. They always had to rely on the off-trading hours and some of the over-the-counter, the ADRs for SK Hynix. But now they can actually do that just from NASDAQ. And also there will be a lot of passive funds that will track SK Hynix in U.S. So that will be great for both the U.S. listed stock and the onshore listed stock. And most importantly, it will be the key would be to actually narrow that gap with Micron. We're looking at about 6.2 times for SK Hynix in Seoul and about 7 times forward earnings for Micron. So we are looking at narrowing of this valuation gap.
Yeah, the narrowing of the valuation gap with Micron, with the Korea listing as well. Lots to look ahead to. Sang-mi Cha, their Asia equities reporter. All right, another story that we're tracking in the tech space in North Asia. NVIDIA's server assembly partner Hon Hai reported a 40% jump in second quarter sales, saying AI demand is growing further. Let's bring in Avril Hong now. She's tracking all that's going on. So break us down really what we saw for the quarter there for Hon Hai.
Yeah, so 40% jump, as you said, in revenue, so just under $80 billion. And this was really driven by demand for AI products, which helped to offset some of the softness we saw for consumer electronics, computing products as well. It's worth noting that as an electronics manufacturer, it too is being affected by the memory crunch. I think the main takeaway from the scorecard is how it has managed to sort of pivot from an assembler of iPhones, MacBooks, and that is indeed where it derives the chunk of its revenues, to being an assembler for these racks that house the NVIDIA accelerators, and it's been quite successful in that regard. So really managing to cement its position, establishing itself as a player in AI hardware.
Well, okay. So how does this fit into this investment thesis then, Avril? Is it Korea and Taiwan? Is it Taiwan over Korea or vice versa? What do we know?
Yeah, I think that is mainly the point that Bloomberg Intelligence, as you guys have alluded to just a short while ago, have been pushing out in their piece today, right? As this AI rally goes even further upstream into hardware, that could enable the likes of South Korea and Taiwan to benefit, and not just as proxies of the US, but also as AI drivers in themselves. At a time where, if you look at these Taiwanese investors and their overseas investments, you look at net purchases for the US, that has been slowing. So it also suggests that among Taiwanese investors, they might be focusing more on things that are local at a time where you look at the likes of other Taiwanese players, right? Not just Hon Hai in the spotlight, the likes of Lagan, for example. This is a company that, of course, has gone from making the lenses that goes into phones to the, photonics for artificial intelligence. And then you really see the outperformance of companies that double down on the AI side of the game. So I think there's more to come, to BI's point on this.
Avril, thank you. Avril Hong in Singapore for us. Just ahead here on shows, TenCap's Junbei Liu is in town, in fact, here to joining us to talk us through China investment strategy and the sector she believes are powering ahead. That conversation comes up in a couple of minutes. Just to get you guys updated too on this other theme we're tracking as we head into the thick of the round of 16. Ongoing right now, we are going into the 11th minutes of the England-Mexico match. Live pictures, 2 a.m. I believe this is in London, so very early Monday morning there, as, of course, we're still 0-0. I understand there is a yellow card has already been, I think it's Declan Rice. We'll get you updated, of course, on what happens there. And what are they wearing?
The beanies? It's cute. They haven't slept, I bet. I bet they haven't slept.
No. Yeah. There's probably some moderate amount of alcohol involved at that point in time.
Can't imagine what's happening in Mexico.
All right. Lots more ahead here on The China Show. Good morning.
All right, it is a big week when it comes, we talked about Korea, obviously, but certainly when it comes to this part of the world in China, we do have inflation numbers coming out on Thursday as well. The central bank front, we certainly are hearing the likes of RBNZ, Malaysia, and of course, those Fed June minutes might be quite telling here, given the fact that we heard slightly less hawkish commentary from Kevin Warsh in Central last week as well. So we talked about what's going on in Korea. We got inflation numbers coming through in Southeast Asia as well.
Yes, and the EM story has really been the dollar strength story, right? So we'll see how that plays out. And given where oil is right now, right? How do central banks then sort of frame the direction of travel as far as future inflation is concerned? And, can valuations hold up amidst what up to this point, question mark, was a picture of higher rates? Let's put all that together for you. Joining us here in set is Junbei Liu, co-founder and lead portfolio manager at TenCap. Very nice to see you. Good morning.
Good morning. Very good to see you. Thank you.
Can we start on Korea?
Of course.
What exposure do you think I should have to Korea at this point?
Oh, look, I think Korea at the moment, you should always have a bit of exposure because I think it's still one of the most exposed market to the whole AI trade. Even though it has done incredibly well, at this stage, we're always seeing is a bit of profit taking by the investors. There's no way showing that it is the end of the cycle. Our view is that it will continue to be underpinned, but absolutely has to be part of the Asian portfolio.
Do you think that the character of this market has changed, right? Before it used to be like, I'm going to watch what the hyperscalers say in the earnings and then, this is going to be my reason to buy Korea. Or is it more becoming its own global AI driver now?
Yeah, absolutely. Look, I think it's a bit of both as well. So, in the old days, is that AI, anything to do with AI, then we go to the Korean market and then to buy, whatever the upside given the shortages and the like. I think at this stage now, the investors are questioning, are we getting enough return out of those areas? Perhaps we should broaden out. We are seeing the same thing in the US market as well. Instead of just piling money into the hyperscalers or anyone talk about AI, investors are now looking for the next secondary impact companies or companies actually generating cash flows and returns out of the whole build out of the AI infrastructure. So, my view is that the investor is broadening out and become a little bit more selective as well, given the valuation pressure in some of the areas. But Korean market will still form a very important part of the investor's portfolio.
So if CapEx was formerly the best indicator for the AI trade. What is that indicator now?
Look, CapEx is a very important indicator, but what that is saying is that for the upcoming next 5 to 10 years or even longer, that it's underpinned in terms of what's going into that space. And so all the companies, what investors are looking for is really all the companies that will benefit from that. It's actually not the company who's spending the CapEx. So, so investors not sitting there, if you're spending quite a lot of CapEx, then we're going to invest in your shares. Which language model is going to win out ultimately is becoming harder call for the investors. Because everyone is investing a lot of money. You remember those companies, hyperscalers, their return will start to deteriorate in the next few years as the depreciation come through, as some of those capex really hitting their P&L. So our view is that don't sit in these names; they start going into other businesses.
And you said valuation is becoming a bigger concern for you.
Yeah, absolutely.
In the US markets.
Yeah, absolutely. Look, I think it's across all the markets we start seeing valuation become an issue, simply because we're seeing the rate cycles now moving up absolutely towards the up now. We're seeing a lot of central banks start moving the interest rate to the high level. Fed may or may not, but we're certainly expecting at least one this year now. So that means is that valuation is not going to expand. Expansion story is done. It has to be an earnings story. For the earnings story to take place, it's less likely to be the larger, if it's in the US market, less likely to be the larger hyperscalers because, the earnings perhaps will be under pressure because of the investment that's going into it.
Talk to us about the resource angle of AI here and how that features particularly in markets like Australia, for example, where you have a big commodity sort of presence.
Oh, absolutely. Look, I'm always a proponent of the Australian market. So if I'm the resources angle, so for every data center that goes in, you have to have all these commodity precious metals such as the coppers and the like. Australia is the market that has the biggest, copper producer in the world, and then the whole long chain of upcoming emerging producer in that space. And remember, copper as a commodity, it's actually very difficult now to get approval to get final, digging out of the ground. It takes 18 years now. That's why you're seeing larger miners around the world are buying existing assets. So it is something that, we see supply continue to become constrained and demand is ever increasing for that space. So that's a really interesting angle. But aside from commodities, so, we're seeing that whole area. So there's your energy, your utility, your pipelines, electrification companies, your circuit board. So memory obviously goes into that space. So there's a whole long chain of, sort of businesses that go to that AI built out infrastructure that we're seeing that investors now taking more interest in.
Yeah, I mean, we talk about the under-owned, unloved sort of markets, right?
Underappreciated.
Yeah. I mean, how much does Australia, you think, deserve to have now in this sort of like rotation, right? I guess I asked the same question about China as well, just given what we've been seeing in H shares.
Yeah, absolutely. So I think both China and Australia plays a really important role. China, especially the A share, I think it does offer a lot of exposure to their AI models. So, and in terms of valuation differential is enormous. I do see that is a, self-contained market where there's a lot of activity. You want to be invested in that space. And it's underappreciated compared to the markets like Korea, where we know there's still strong earnings momentum, but I think, the next outperformer will be the likes of China. Australia is a little bit hidden. As we talk to, it's not direct AI. We don't have all the sexy likes. We are the picks and shovels, they call it, and then the raw materials. So we are actually already seeing that thematic emerging in the Australian market. They're much cheaper. These companies are generating good cash flow, good dividend, and then they now have their pipeline suddenly just picked up enormously. And what's also interesting is the Australian market, in terms of data center investment, is a couple of years behind what's happening in the US. So we are seeing what has been going so well in the US now playing out in the Australian market with a little bit of lag.
And as far as China is concerned, the earnings story seems to be the number one concern, or the lack of an earnings story seems to be the number one concern. Do you share that view, or are you looking at something else there?
Yeah, look, I think with in the consumer front, certainly, and corporates, so it's actually, what do they call it, the K-shaped economy, isn't it? So we've got on one part, the investment across the AI and others are doing incredibly well. Whereas, in the consumer front, the consumption is still pretty poor. I think the confidence, we are at least seeing the property market, still doing pretty badly, but it is stabilizing. So it's the confidence. We need to see real income coming through, and perhaps we're still a few quarters away. But ultimately, with the consumer not really investing in their, in the housing market and the like, I think it's a massive tailwind into, the share market. And given where some of those, government protected and directed space, the opportunities are, the technology, the AI, and I think the opportunity is real there.
What would spark that re-rating? I know you mentioned the structural support, which is, of course, the pile of household savings that many Chinese investors still have. Have we seen any indication of that being deployed into financial markets? Yeah,
sure. So last year, we actually seen quite a bit of activity pulling through, in terms of the Chinese share market, the retail participation. Now, clearly this year is still somewhat little bit softer, but last year what we saw was really the valuation expansion. And this year we have to see the company's earnings growth coming through. Now, the challenging thing is that, we're still waiting for the confidence to completely turn with the real income growth. And I think that's still a couple of quarters away.
Junbei Liu, thank you so much for taking the time to come in. Very nice to see you, by the way, in person, finally. Junbei Liu, their co-founder and lead portfolio manager at 10Cap. Going into the open today, the Monday session, 0.25% to the upside on the Hang Seng Index, 23.5, 55 points to the upside. The opening bell 7 minutes away. This is the China Show.
Your agenda for Greater China here today, Wang Yi is in Norway. That's certainly one thing to watch there, of course. And also when it comes to some data that just came out when it comes to Hong Kong. Hong Kong PMI numbers, which continue to look pretty strong here this morning. Sectors to watch out for. There was some proposals when it comes to the change in some of the sort of industry standards, I guess, when it comes to e-commerce, platforms, autos, and brokers. We'll see if there's any sort of movement on the stocks there. Hong Kong Exchange, right? Just talk about the week that we're talking about. 15 listings set to debut here in Hong Kong this week. BofA could be an interesting one. There was some developments here when it came to lobbyists in the U.S. there at a time when they have been put on that Pentagon blacklist as well. So certainly that could lead to some sort of reprieve that they are still able to work with some lobbyists during this sort of limbo time. Renminbi strength is certainly one thing to watch as well, just given the dollar pullback that we have seen the last week or so. Yeah,
just on BofA, we are a little bit flat, slightly higher there in the pre-market. Just to note that going into the open today, Hang Seng Index about 23,500 for you. A couple of stocks we're tracking, as Yvonne was pointing out, a couple of sectors, right? Given, of course, the broker story, which we'll talk about with Lulu Chin in about a couple of minutes. So stay tuned for that coming up. Some of the platform companies on your screens, we mentioned that we're flat across those. Flip the page, please, if we can. EVs is going to be very much in focus. Might not be the next one you see, but just to mention, Piron, of course, that's a share sale. So China will be scrapping vehicle and vessel tax breaks for commercial EVs. Certainly we'll be tracking that lot as we go into the open today. The opening bell, 3 minutes away. This is the China Show.
Happy Monday. If you are watching the England-Mexico match, what's the score now? Nil? It's still 0-0?
Yeah.
Okay.
The sum is still
nil. So nothing's
nil.
Happening. That's why you got to watch what's going on in these markets right now here. It's a big week for Korea, as we talked about here. Samsung earnings, SK Hynix, ADR listing, 24 hours when it comes to the won trading. So certainly there should be some more catalysts in this whole AI trade, and we'll see. Right now we are seeing when it comes to Hang Seng, we're up about 1/5%. Futures are punching higher in China this morning, and still strength of the currency, 678 levels for dollar China here right now. We are on tap for some sort of listings here today. 15 total in Hong Kong. That certainly could be one thing. We'll talk about the regulatory side of things here, given this news about IPO book building and this new sort of oversight push as well. And what does it mean for the Hong Kong IPO market in particular? But right now we are kicking off the week here on a positive start. There you go. Chinex is up 0.7%, seems to be leading the charge here. Oil markets and Shanghai crude is falling just slightly here on the back of what we saw, right? OPEC Plus once again raising production, despite it at a time when oil prices are actually heading in the southerly direction here. And we are starting to see flows go through the Strait of Hormuz. But we're still watching the likes of Capricorn Tech. There you go. We're up 2%. So I can see the chips might do quite well here today. Hon Hai certainly had some very good numbers coming through when it came to sales. So certainly that could lift things up. The Samsung earnings story, we're expecting here, maybe potentially according to local media, that they could be raising DRAM prices, right? So maybe more catalysts in the chip trade here today. On the flip side, we're taking a look at some of the consumption names. Midea is still doing quite well. I mean, that heat wave in Europe might be helping things a little bit. Hong Kong's doing this, not as well as onshore markets. And we're seeing when it comes to HS Tech, marginally lower, being led by the likes of Alibaba, Tencent. Baidu is down some 2% as well. Hang Seng, we're just around that 23,300 mark here this morning. So not much in terms of green on the screen this morning. In terms of individual sort of sectors, the oil market certainly could be one thing where we might see more of that sort of decline given the oil price and what we've been seeing there. So there you go. Marginal declines here when it comes to some of the big oil names in China. There was also Iran's envoy to China was talking about when it comes to oil flows there as well. And then OPEC Plus, of course, raising production there as, of course, these Gulf flows rebound. Watching auto stocks in particular, because there was this talk about them when it came to the EV and vessel taxes, right?
Commercial EVs specifically.
Sorry, commercial EVs and vessel tax breaks, right? So they're scrapping that. Now moving forward. So we'll see how this plays out for some of these EV stocks in particular. Li Auto is down more than 1.5% as well. BYD might be the exception here today. And we're watching the brokerages as well. Just given that it's a busy week when it comes to listings here in the city, but this coming at a time also of maybe some more regulatory oversight.
Yeah, around specifically IPO book building, which we'll get into in a few moments if you're patient here. Just in terms of the listings angle, just a look at some of the companies that are set to hit the markets this week here in Hong Kong. Tong Ren Tang, of course, which is the TCM or Chinese medicine company here. Number one, a couple of other stocks here, chip firms, in case you're curious about that specific sector, also on your screens. Okay. Right. On the story. So Bloomberg has learned that Hong Kong's market watchdog is intensifying scrutiny of this red-hot IPO market. Let's bring in Lulu Chen, our managing editor for Asia Finance Investing and Wealth, to talk us through specifically what they're targeting at this point.
Well, the SFC has picked IPO allocation and book building as their next regulatory focus. This is a follow-up of the regulatory tightening that we've seen since the end of last year, where they're really focusing on market quality. And right now, part of the reason that they're picking this area is because they've learned about how some of the buyers of these IPOs have inflated demand, and the buyers could be related to the issuers themselves or to major shareholders of the companies. They've already notified banks, issuers on these practices, but the SFC has declined to disclose any names involved in the process.
What does this mean for retail investors then?
Well, the larger trend for Hong Kong's IPO market has always been that the retail demand proportion has come down significantly after regulatory changes in the past few years. Part of these scrutinies are also there to ensure that the demand is real, that the retail buyers are protected, and also a clear up of the financial market quality, as we've seen in the past year since the regulators stepped up their scrutiny.
Is there a sense that this affects pipeline at all? This general exercise, as you mentioned, of course, this isn't new. They started this last year. What's the sense you get?
The sense that we're seeing is there's still very strong demand on the issuer side, on company side, to get their companies listed in Hong Kong. Pipeline, as we saw earlier in the year, 400 companies waiting in the pipeline. So that hasn't changed. But on the buyer side, the orderer side, the less quality companies, for starters, it's always been a struggle to push less quality companies to the market, and hence that's where these practices came in and why the regulators are looking into these practices.
Lulu, thank you, Lulu Chen there, our managing editor for Asia Finance, Investing and Wealth, joining us here. Some other corporate stories that we're tracking for you today. A U.S. judge has ordered the Pentagon to give Alibaba a reprieve from a law that caused all of its lobbyists to drop it as a client. Now, the move comes after a new law targeting entities allegedly aiding China's military took effect last week and restricts the Defense Department from working with any company represented by lobbyists who also work for blacklisted entities. The case could test DC's ability to curtail Chinese companies' activities. And Micron has broken ground on its expansion of its factory in Hiroshima. The $9.3 billion plant is to make high-bandwidth memory chips crucial for companies such as NVIDIA. The expansion comes as part of a global ramp-up by memory makers to meet demand for AI, with the Japanese government allocating $3 billion to help cover the cost. All right, we're still focusing on the chip side of things here. Of course, SK Hynix, whether that valuation gap could actually start to narrow on the face of what we've been seeing with this U.S. ADR listing here, right? And what could this mean for Micron, given that there's not that many pure plays in the U.S. for investors to tap into? So certainly that could be a good opportunity.
Well, after this week, there will be a number two.
Yeah.
Number two meaning a second one.
The second one.
A second one. Okay.
Take a look when it comes to Hong Kong here today as we get to a break. Some clouds have been it's been raining. It's been hot all weekend.
It's tough weather here.
Stay at home and watch some TCS.
Yeah.
And the World Cup too. This is Bloomberg.
Okay, so we've been tracking this ongoing World Cup match between England and Mexico. Mexico, of course, one of the host countries there. Live pictures out of London. It's getting late, or it's very early in the morning, and we understand that England have again, based on the reaction you're seeing there, they have scored again. So it's now 2-0. We're going into the 40th minute of the first half.
Wow.
And it looks like Jude Bellingham has again scored within the span of 2-3 minutes, has scored twice there for England.
Wow.
Can you make out what the hats are?
Yes. So I looked this up. They're bucket hats that say it's coming home. So is football coming home? I mean, right now,
it is a step in that
direction. They are in the lead, right? You're talking about two goals in 2 minutes, right? Certainly, we're watching. We can't watch the match, but based on just what the crowds are doing, we believe they've scored. But yes, we just confirmed that 2-0 right now.
Okay, let's wake you up. Let's talk about oil prices.
Why not?
Why not? The front end contract of Brent is up a staggering 0.5%, down a staggering 0.5%. We're lower across the Asia Pacific today. You have energy flows across the straits, through the Strait of Hormuz persisting. You have, of course, the other related story across OPEC Plus signaling higher supplies here, raising concerns about a potential glut, how quickly things have changed, and the narrative has shifted almost about 180 here. Joining us to talk us through this, our oil trading reporter, Rongwei Neo, to talk us through this. I mean, wasn't it 10 weeks ago we were talking about a massive shortage, and now it's a glut? What gives?
Right, so of course, through the prices, we can see how the market is reading this so-called glut, which essentially is a wave of oil barrels coming out from the Strait of Hormuz after they have been loaded and stuck in the Persian Gulf since the war erupted just a couple of months back. So of course, right now, with this wave of supply that's entering the market, a lot of Asian buyers are seeing this short-term glut because on one hand, they have the backlog cargoes coming in. On the other hand, there's also the wave of cargoes they have purchased during the war for energy security purposes at higher wartime prices. So with both coming at play, of course, this short-term wave of supply has been hitting the market hard, and it shows in the prices. And of course, if you remember right before the war, or even sometime, let's say at the end of last year, the market narrative really is we are headed for oversupply in the next couple of years. So if you look at it from another perspective, essentially the Iran war just kind of put a pause on that, but structurally, oil markets are still headed into oversupply based on every other market indicator, such as OPEC's production, added production coming from areas such as Americas, both US, Latin America. So all that coming into play, which is why we are actually seeing this supply glut hitting us. Though it comes as a surprise due to the pace where it's coming at, though I do have to caveat that all this could change if the peace deal doesn't hold.
That's also true. Why is OPEC Plus still raising output then? What's the rationale behind that?
So OPEC, they're still in the midst of unwinding cuts that they've made a couple of years back, and that stemmed from as far back as when the Russian-Ukraine war happened. And they're still on track to unwind these cuts. But we do have to note that all these cuts are mainly on paper or theoretical, because all these targets that they've set, such as the latest being 188,000 barrels a day in August, is merely a target because we have seen research that shows some of the OPEC producers may not actually have the capability to produce this volume. So it's an ambitious target. It does set some kind of direction on where OPEC producers should be heading, which is they're still on track to increase production. But the actual physical rate of barrels entering the market would highly depend on how much these producers could ramp up the amount of oil they can drill, package it, load, and send it out of the sea. And again, that depends on what's going to happen between US and Iran after this interim peace deal. Because how these oil are transported out from the Strait of Hormuz would be one key deciding factor, which will sort of set the tone for how fast these OPEC producers can actually raise production.
Rongwei, thank you, Rongwei Neo there, our oil trading reporter joining us out of Singapore. Now to some other global stories that we're tracking for you today. President Trump is expected to meet with Ukrainian leader Volodymyr Zelensky at Wednesday's NATO summit in Turkey. Now the gathering is set to expose tensions over the U.S. leader's views on Greenland, European defense spending, and the Iran conflict, as well as its inability to end Russia's war as promised. Separately, Ukraine says it attacked 16 power substations in Crimea and other Russian-occupied regions over recent days, while Russia says it struck military sites and infrastructure inside Ukraine. Now at the FIFA World Cup, star U.S. striker Philippine Balogun will be allowed to play the round of 16 game against Belgium later Monday after having a one-match ban lifted. It is a rare reversal, and Bloomberg's been told it came after President Trump personally called FIFA boss Gianni Infantino following Balogun's red card in the previous game. Belgium's team says it's, quote, astonished by FIFA's decision and is reviewing possible options to appeal. Yeah, we were just talking about, this is quite unprecedented, right? This sort of what we've been seeing here, especially if it isn't coming from the president.
Yeah, and then it didn't help the optics specifically that the U.S. president then posted, and he thanked FIFA for that favorable decision, which, I mean, so when you look at the rules, so if you have a red card, you're automatically suspended for the next match, although there is some discretion within FIFA itself. So you can't, when I say you, the team can't appeal the red card.
Yeah.
So the red card actually still holds.
Okay.
Now, FIFA has discretion. It's happened very, very rarely that they've suspended the suspension and they've instead put in a probation. I think they did it with Cristiano Ronaldo very recently.
Yes.
And obviously now the optics are not helping. So, yeah, he is set to play, of course, when they face each other. Anyway, I think we'll talk about
We'll talk about the politics
that
are getting involved now here right now. So certainly that's one thing to watch. But let's bring this back to all the cheers and live picks that's going on in London here right now. I believe Mexico has scored, though, in the last couple of minutes. I haven't watched football like this how closely I'm watching it now than I am with the markets. When it is quiet, the markets front. So I guess we can focus on football instead today.
Yeah, we're just going into stoppage time, first half.
This is Dave's chance to shine, to be the football,
Yeah, well, we don't have
the analyst.
We don't have. So I had initially dollar yen, $1, SK Hynix on my screens. But
what up sterling? What's sterling doing, right?
I think sterling is a little bit weaker. FTSE futures are slightly, I think, flat right now. You are getting a lot more volume. Jude Bellingham, of course, 36 and 38 minutes scored. A couple of minutes after that, Mexico got one in, and I think we should be heading into the half very, very soon at 2-1. Now, the winner faces Norway, which caused quite an upset this morning.
They beat Brazil, right?
They beat Brazil.
Oh, my goodness.
2-1. So anyway, we'll keep you guys up to date on what's happening here. Obviously, if you still need, of course.
Our resident football expert, David Ingles, there with the latest when it comes to your FIFA World Cup. We'll bring you more updates here coming up, not just on football, but markets too. This is Bloomberg. Well, battery giant CATL is investing in a New Zealand headquartered company that converts forestry byproducts into graphite for use in lithium batteries. We're talking about CarbonScape's here. Chief Commercial Officer Vincent Ledoux-Paydai spoke to us exclusively about the partnership and what it means for the future of battery materials.
This is a significant milestone for CarbonScape. We've been working on developing this unique technology for the last few years, and today we're receiving the backup from the largest battery cell maker in the world. What it means for OEMs and cell makers outside of China is that finally they have a solution to diversify away from the oil market, which is today the main feedstock used to produce graphite, and they're also finding a way to source a more sustainable graphite material that can be produced locally within Europe, within the US, and ex-China at competitive costs.
How important is that diversification, and how much of an impact do you see on production ability from these broader sort of macro influences, right, such as an energy crisis and disruption that we've seen?
It's becoming increasingly important, especially within Europe and North America. Even for Chinese players who have built battery capacities in Europe, like CATL, they realize that if we are going to build traditional, conventional graphite assets within those regions, they are not going to be cost competitive, and the pricing is going to be very volatile because it's indexed on oil markets, which is why it's very important to be able to develop alternative technologies, such as producing graphite from local forestry resources, which is much more stable from a cost perspective, and also much more sustainable and available widely across most regions, excluding the Middle East.
Tell us about the cost advantages when it comes to this technology.
So it's mostly two things. The first thing is when you source wastes or residues from the forestry industry, it is much cheaper than sourcing an oil-based product such as petcoke. But it also comes down to the energy requirement when it comes to converting an oil-based product into graphite, which requires up to 3,000 degrees during the production process. When you convert wood products into graphite, you only need half that temperature. So you're saving on energy and you're saving on feedstock costs.
How do you view the economist's view and the sort of research views that there's a looming deficit when it comes to the global graphite market? What's your view of that?
Yeah, so currently the graphite market going into battery application is around 2 million tons per year and expected to grow by a double digit per year for the next 10 years. However, when you look specifically at the European and North American markets, the deficit is expected to be 1 million ton by 2030. So basically half of the size of the global market today. There's no capacity being built in those regions because, as I mentioned earlier, those assets are not cost competitive. So we need to find new ways of producing graphite so we can build those assets locally, and we can help European and North American OEMs to both de-risk and also decarbonize their graphite supply.
Yeah, there we go. CarbonScape's Chief Commercial Officer speaking exclusively to Bloomberg's The Asia Trade. Now, just a quick glance at markets. We're looking at several sectors today. Memory, of course, some reporting out of Eats High here that Samsung plans 20% DRAM price hikes. And I think this really moves like this have kept the memory rally alive. And I think tomorrow we'll really get the best update there as far as the memory side is concerned with Samsung earnings coming out. So we'll see what that kind of looks like, what their guidance will be. I think it's prelim though, so might just be as far as that's concerned. But the last time Samsung came out with earnings, we had a massive adjustment lower in valuations in Korea just because of how crazy both the reported numbers were and the guidance coming through there out of Samsung. It's leading to gains is what we're trying to say as well.
Yeah.
The memory space.
Does it add a little bit more longevity to this AI cycle? Certainly, if you continue to see DRAM prices quite elevated here as well. So it just goes to show maybe there's still a little bit more upside here when it comes to that. But I think Korea has been pretty all over the place this morning as well. I think they already did erase a bit of a 3% pop at the open here. So there's certainly a lot of questions there. We're going to talk to Shuli Ren about what Michael Burry said after last week. That he mentioned that he was shorting Micron because of just how cyclical this stock is, right? So certainly that's one thing to really kind of debate about in the next sort of few minutes or so. Brokerages we're also tracking here today, just given it's been a busy week. It will be a busy week when it comes to listings in Hong Kong. Also, there's Guotai Haitong earnings that did jump as well. So these brokerages are doing quite well here today in Hong Kong, onshore as well. You're looking at coal stocks as well.
Yep, we're looking at very quickly. Have a look at it on your screens coming up. Certainly, I think the conversation here around coal specifically, this regulatory oversight, this is based out of this news coming out of Xinhua. Given the safety violations in some key sectors, there's not a lot of movement as far as coal is concerned. Life insurance coming up on your screens as well. This is really on the back of some guidance coming through out of Citi as far as their note on the sector is concerned and as far as life insurers are concerned here.
Yeah, they're set to report strong results for the first half, according to the bank here. They're talking about double-digit premium growth, new business value growth, and just basically better equity performance we've seen in the A-share market. So they basically think maybe all stars are looking at pretty decent set of earnings coming through here as well. So there you go. China Life and China Taiping are both up here this morning. Dashboard is looking like this here right now when it comes to China. I think earlier we were talking about onshore markets doing quite well, right? Given hardware is doing quite well today. So that's why you are seeing the likes of CSI 300 is doing better than Hong Kong, for example. But we're still seeing green on the screen.
Green, and I think we'll get into the oil story in a moment because as you can see, it's sticking out there as well. The decline in oil prices is something we'll get into the second hour of the China show. Very packed week as well on the agenda. So we've talked about the IPO story. 15 are set to list here in Hong Kong. On the regional macro side of things, a rate decision, of course, will be very much in focus midweek out of the RBNZ. Plus, of course, as you can see, others in and around the next couple of days or so. Lots more ahead. This is the China Show.
All right, halftime when it comes to
the China show. We're entering the second half.
I know. We're also sports analysts, or at least sports commentators and presenters here this morning because we are halftime when it comes to that England and Mexico match here. So it gives us time to look at markets a little bit. And we are actually seeing some momentum coming back, particularly when it comes to Greater China here today.
Yes. The memory story on the hardware space on the CSI 300 is really lifting the tide. We showed you quite a strong rally there. And obviously the Samsung story is really the catalyst for that and reporting that it is looking to raise prices on DRAM 20%. So let's see how that features into a really, really big week on Korea this week. In Korea this week. Let's have a look at the rest of the region here. So that's what the CSI 300 is doing. Nikkei is off opposite ways as far as the topics is concerned. So it's actually very quiet on the overall index front. The Kospi has been all over the place. We're now down 0.8%. We've hit quite a negative milestone in as far as specific outflows are concerned out of South Korea. So this is the best performing market year to date. Let's call it 95%. Year to date, it's also seen 100 billion of outflows year to date so far. So do the arithmetic on that one. Across the region here, TSMC, Samsung, SK Hynix, SoftBank, and of course, there's also the Hon Hai story because out with some quarterly sales there. The FX space, dollar China, dollar Japan on your screens. We've been hovering around the 162 handle since, of course, the big dip going into our Friday last week on dollar yen. Dollar Taiwan, by the way, this is something that we've traded for the first time since April, above the 32 handle on dollar Taiwan. And of course, the dollar index, as you can see, some strength coming through here in the currency.
Yeah, certainly one thing to watch as, of course, we count down to what is a pretty busy week when it comes to the Korea, right? We talk about Samsung earnings. We talked about this U.S. listing of SK Hynix and the ADRs. And then you have 24-hour trading when it comes to the Korean won.
Yeah.
So what does this all mean? Joining us now is Claudio Piron, head of Asia FX and Rate Strategy at BofA Global Research. Claudio, I want to start on the won in particular, just given there is a lot of anticipation of what currency flows might mean in light of some of these listings that are going on in the U.S. But the won is still one of the worst performers in Asia year to date. Do you see any signs of any of a turning point?
Yeah, that's a very good point. I think what we've seen amongst our clients in the past week or so is some increased activity looking for some dollar Korea downside. Now, that said, as you pointed out, the conviction levels are very low because it's been a long graveyard of long Korea won positions and long received positions in the rates market. But we are seeing that anticipation of maybe potential exporter dollar selling. But in addition to that, the Hynix flow may be coming back into Korea as well. And the potential threat maybe of BOK intervention into the markets and the behest of them off. So I think those three conditions are maybe allowing some of the investors to tip their toes back into the water and look for some short dollar Korea positions at this moment. But one has to be careful with this outflow, or partly for the right reasons, in the sense when we get the Korea Kospi outperformance, that does lead to significant outflow, which is a significant headwind to the bullish calls on Korea won. And what we're calling for now is a 15% current account surplus, so which should be positive, but up until now the outflows have ruled.
Yeah, it doesn't seem like when you look at the graph of this currency, Claudia, that this is the currency of a country, an economy that is running current account surplus to the extent you've outlined there. How much of this is simply just down to good old-fashioned dollar rates and dollar yields and that yield story in the dollar?
Well, we've had for some time, particularly at the end of last year and beginning of this year, one year forward Korea swaps, interest rates, future expectations of interest rates above US rates. And one would have hoped, or that was one of the premises for being potentially long Korea won against short dollar. Then we had this complete kind of repricing of the US curve and our own expectations that the Fed will hike 3 times at the end of this year. That has kind of given the dollar a new lease of life. I suspect with the softer non-farm payrolls last week, and maybe the July, threat or risk of a Fed hike being priced out, that may give some more breathing room. So again, I think we're in that summer lull period where carry trades are more popular, so people may reach for that rate differential again. And I think, again, that's one of the reasons that gives us some more downside on dollar Korea on a near-term basis.
The yen certainly is maybe taking more focus than the won on some days, Claudio. We're still talking about 161 levels. Do you think that the surprise element of intervention? Do you think that door is now closing further and further, narrower and narrower now? I mean, how are you looking at intervention risk now?
Yeah, it's increasingly, it certainly feels as if it's nearby, but it increasingly at the same time tends to be a bit of a mystery. One apparent thing is if you look at the correlation between dollar Korea and dollar yen, that has been picking up. So that could be a self-reinforcing issue where yen weakness is spilling over to Korea weakness and vice versa. So that's one thing that authorities and officials need to be more watchful of, and how that spills over to the rest of the market. At the same time, there was anticipation that maybe into Friday, the BOJ could take opportunity of the market holiday period and take that thinner liquidity to push the market lower, but it didn't materialize. At the same time, obviously, we have the Takeichi administration in Japan leaning against the BOJ, which, every day that passes without intervention suggests discreetly and implicitly that the administration is having more influence, maybe, or bearing on judgments related to intervention. Again, intervention is the authority of the MOF in Japan, but the absence also lends more concern that policy is being driven more from the government, which again means that inflation could be more of an issue, that negative real rates could be more persistent, which means the yen weakness can persist as well. So one would expect, and one has been expecting intervention, but its absence is kind of certainly negative for the yen as we go forward.
So, Claudio, could be two different questions given the dynamics around the yen, which you very nicely laid out for us. What do you think is near-term direction on dollar yen? Where does it go? What's the house view? And what is the advice to clients in as far as specific trades around the yen is concerned?
Yeah, well, I think near term, the market will continue to tread higher in dollar yen. I think that's, and test the policymakers where they will be into the market. I think that's generally the way we will go. Overall, on a structural basis, my colleague and yen strategist at Bank of America, Yamada-san, is basically looking for actually lower dollar yen at 152. We've been bearish structurally for some time on the yen, but a couple of months ago we switched to becoming more neutral to positive on the yen, partly because of the balance of payment situation changing more significantly. So medium to longer term, we'd expect dollar yen to move lower, but what we really need is a bit more of a catalyst, and we need BOJ MOF to show more of their hand in the market to try to push back on the notion that the doves are I would characterized as more benign neglect is coming through. So I think we do need that show of hand by the BOJ to come through to tilt the market the other way and give confidence to the market for the bulls to come out and play for downside in dollar yen.
The anchor within the EMFX sort of space still remains to be the renminbi. I feel, Claudio, do you expect it to stay that way, just given it seems like policymakers are a little bit less tolerant of the strength of late?
Yeah, we've been holding a year-end 6.7 view for some time, and that's pretty much where the forwards are. So I'd characterize ourselves being more neutral now than outright bullish. To some extent, we've got the CFETS basket trading above 102, which is at the historical highs of the range, which again would suggest that maybe the PBOC would want to be a little bit more cautious about CNY appreciation. That said, we've seen the dollar-China fixings move gradually lower again. What has helped has been the ISM PMI data last week, which showed the economy in a better shape. I was a bit more concerned about the April-May data, particularly the fixed asset investment and retail sales, showing some weakness, more pronounced weakness and deflationary bias. So I would say I'm much more neutral on the renminbi than I was in the past. So, the only thing what's helping the renminbi at the moment is it tends to be a shadow soft dollar peg. So if the dollar is being, more supported and elevated or stable at the moment, that will help the renminbi relative to its peers. So I think that's the one thing that's helping the renminbi at the moment. But the data certainly makes me a bit more concerned of where we are, and the trade-weighted valuation as well suggests maybe the PBOC will be certainly leaning against significant appreciation. And obviously we have the dividend payment flows upon us, which also eats into the export of dollar selling. So the export of dollar selling, which can be about $60 billion a month or so, the dividend flow outflow may be about $20 billion. So that's a significant offset, a meaningful offset to the export of dollar selling.
Claudio, very short term, this new week we're going into, does anything stand out to you? What major item in the agenda do you think we should be paying attention to this week?
Yeah, David, I would say it would be the inflation. So we've got the Thai inflation today, Philippine tomorrow, Taiwanese as well. What we might be seeing is maybe peak in the inflation, some relief in the inflation. So the lower oil prices helps. If we get some sign that the June inflation data is showing some payback on the headline inflation, that may allow investors to feel more positive and constructive on the bonds, because bond yields have backed up quite substantively in Asia. So that might bring some value investors back in and some positive flow. And on the carry side, really, emerging market carry strategies have only been working really in LATAM FX. But maybe if we get this lull in the market stability and inflation coming off, it might draw some people back into INR, peso, and even IDR. But we'll see.
Claudio, thank you for the time. Happy Monday, and do have a good week ahead. Say hi to your team for us. Claudio Piron, their head of Asia FX and rate strategy at BofA Global Research. Just ahead here in shows, we'll be having a look at this trading debut. Speaking of a big week for Korea here, SK Hynix ADRs, of course, towards the latter part of this week. NASDAQ, of course, into our Saturday. If you're watching, of course, out of the Asia Pacific, more on this massive milestone that's ahead. This is Bloomberg. Right, welcome back. It's Monday. It's a new week. It's an old story if you think about it, really, this story across chips, memory, but certainly we'll get new milestones this week. And as far as this is concerned, of course, the big one, the big deal specifically is, of course, SK Hynix toward the latter part of this week. The other piece of news, of course, is Samsung, that other big name, reports of a price hike.
Price hikes and DRAM prices, right? So maybe that is going to be proving to be good for, of course, Samsung and the rest of the memory chip space here, right? You're certainly seeing that when it being reflected in some of these memory makers in China. Korea has been a bit choppy here. We talked about how we're losing a bit of momentum there in the Kospi this morning. Let's fire those boards just to show you, right, of what we are seeing. But the key thing to watch from this SK Hynix ADR listing, I think, it's still unclear if it's fungible, right? Whether you can exchange with the Korea-listed shares. So if basically if they can't, there is going to be a question about the valuation, right? And whether it's really going to be trading at that discount. We're certainly seeing that with the likes of TSMC. I mean, that dynamic with the ADRs.
The local listing,
yes. So it's going to be interesting to see if that pans out. And really, not just when it comes to the ADRs and its own sort of.
Well, there's another name in the U.S.
There's another name in the U.S., Micron as well, which there is still a bit of a discount there too.
I think we have a graphic that shows you this, right? You have SK Hynix and Micron, and of course the discount that we're seeing currently given where SK Hynix is trading. Can we get that up, guys, if we can? There we go. Thank you so much. So the plot line is quite complex in as far as this listing is concerned, given, of course, how fantastic this trade has been also as backdrop there. Let's bring in our team to discuss the multiple components and angles to this big story this week. Our Asia ECM reporter Dave Sebastian is here with us on set, along with Bloomberg opinion columnist Shuli Ren. Dave, let's start with you. The significance of this listing in the context of this IPO market. Let me start with that.
Sure. So this is set to be the world's third biggest listing ever and the biggest for a foreign company in the U.S. And just to put the sheer size into context, I mean, this dwarfs a bunch of the listings, I mean, like that we've seen in Hong Kong recently, including CATL's $5.3 billion float last year in Hong Kong, as well as the upcoming Luxshare listing of up to $3.1 billion this week. So it really puts that into context, right? And this is really on the back of the AI frenzy, as well as the demand for memory chips.
Tell us about the timing. I mean, certainly it's a time when people are questioning whether this is a super cycle in chips or not, and Korea has been quite volatile. But then again, there's deep pool of capital in the U.S. as well. So what's the timing like?
Indeed. So they're set to list soon, and their share price in Korea has risen more than 800%. So it's sort of hard to ignore that performance, right? And but at the same time, as you pointed out, their valuation trails behind their peer Micron in the U.S. So this listing, this deal offers them this chance for them to catch up, as well as to offer investors more access to their stock beyond just Korea.
Shuli, I'll bring you in. Michael Burry has some interesting sort of commentary around Micron. They announced last week that they've been shorting that stock, right? I want to bring up the quote of what he said, that basically when you look at a stock like Micron, he says it is basically defined cyclical like no other. And he says when times are good, the stock gets pumped more than it should. And when times are bad, it gets dumped more than it should. Do you think he's right?
I think he's absolutely right on this one, even though he has been wrong on many things in the past. So what we are seeing is that, like, actually we have seen with Micron earnings, right? Like, it was a fantastic quarter, and then analysts raised their earnings expectations, and suddenly Micron looked very cheap. It was not even 10 times forward earnings. And then retail investors will say, oh, it's a very cheap stock, right, compared to S&P 500, and they will chase. And then what you see is a rally up. But as soon as there are doubts over chip makers' earnings cycle, then investors will question analysts' earning forecasts and say, okay, the analysts, you cannot listen to them. 100% growth really should be 50%. And suddenly the likes of Micron and SK Hynix just look expensive in terms of forward earnings, right? And then these shares get sold. And I think he has a point on that. But he was also talking about how Korea companies' massive capex is hurting the whole industry, right? Like in the boom time, you have the Koreans spending a lot of money to expand their factory capacity. And then in the downtime, we have China's CXMT coming to market. So I think he has a point on this.
That's exactly what happened to Samsung when it reported the earnings guidance shrunk the multiple. And I guess the question is, are we in a super cycle that then supersedes this boom and bust cycle that we're in?
I think, the chip makers, they're trying to prolong this cycle, right, before we see this cyclical thing. And they just want to make the length of the cycle longer. So what they're doing is the so-called long-term agreements. And the Micron was giving a lot of details at the last earnings call. Basically, 20 to 30% of their shipment volume will be under this kind of a 3-5-year long-term contracts. They will be prepaid, and then customers will have a very hard time backing out. But that said, it's also tricky, right? How do you design the pricing to capture the upside, and whether your contract makes sense for others to sign out? These are still big question marks that we have no answer to yet.
Dave, I'll bring it back to you. Largest share sale for a foreign company ever, $29 billion raised. What does this mean for the bankers?
So for the banks, this is one deal that they would really pounce on. And we reported just a couple days ago over the weekend, that this deal is set to pay around a 0.5% fee for the banks. And while that might sound small, this deal of this size, it's quite normal for the issuers to pay the banks this much, because the absolute amount would be big, as expected, right? So for this one, it could be over $130 million, depending on the valuation. And to put that into context, SpaceX paid around $500 million for their mega listing. So really, it comes down to the absolute figures, and this is one that banks would be chasing for their league tables.
Okay, that's going to help the rankings. Team, thank you so much. Dave Sebastian, our Asia ECM reporter, and Bloomberg Opinion columnist, Shuli Ren there. A reminder that you can rewatch that specific segment or others that you might have missed here on shows today. The Bloomberg Video Hub, of course, subscribers can explore our live streaming and all our news and interviews here. Check it out on Bloomberg.com/videos. We'll take a short break. On the other side of it, we'll update you guys on markets, get into things like India, for example, and also give you guys an update of this ongoing match between England and Mexico. I believe it's still 2-1 in favor of England, but there's been a red card that's been issued. I'll leave that tease for now. This is Bloomberg.
Well, battery giant CATL is investing in a New Zealand headquartered company that converts forestry byproducts into graphite for use in lithium batteries. CarbonScape's chief commercial officer, Vincent Ledoux-Paydai, spoke to us exclusively about the partnership and what it means for the future of battery materials.
This is a significant milestone for CarbonScape. We've been working on developing this unique technology for the last few years. And today we're receiving the backup from the largest battery cell maker in the world. What it means for OEMs and cell makers outside of China is that finally they have a solution to diversify away from the oil market, which is today the main feedstock used to produce graphite. And they're also finding a way to source a more sustainable graphite material that can be produced locally within Europe, within the US, and ex-China at competitive costs.
How important is that diversification, and how much of an impact do you see on production ability from these broader sort of macro influences, right, such as an energy crisis and disruption that we've seen?
It's becoming increasingly important, especially within Europe and North America, even for Chinese players who have built battery capacities in Europe, like CATL. They realize that if we are going to build traditional, conventional graphite assets within those regions, they are not going to be cost competitive, and the pricing is going to be very volatile because it's indexed on oil markets, which is why it's very important to be able to develop alternative technologies, such as producing graphite from local forestry resources, which is much more stable from a cost perspective, and also much more sustainable and available widely across most regions, excluding the Middle East.
Tell us about the cost advantages when it comes to this technology.
So it's mostly two things. The first thing is when you source wastes or residues from the forestry industry, it is much cheaper than sourcing an oil-based product such as petcoke. But it also comes down to the energy requirement when it comes to converting an oil-based product into graphite, which requires up to 3,000 degrees during the production process. When you convert wood products into graphite, you only need half that temperature. So you're saving on energy and you're saving on feedstock costs.
How do you view the economist's view and the sort of research views that there's a looming deficit when it comes to the global graphite market? What's your view of that?
Yeah, so currently the graphite market going into battery application is around 2 million tons per year and expected to grow by a double digit per year for the next 10 years. However, when you look specifically at the European and North American market, the deficit is expected to be 1 million ton by 2030. So basically half of the size of the global market today. There's no capacity being built in those regions because, as I mentioned earlier, those assets are not cost competitive. So we need to find new ways of producing graphite so we can build those assets locally, and we can help European and North American OEMs to both de-risk and also decarbonize their graphite supply.
There we go. That was CarbonScape's Chief Commercial Officer speaking, of course, exclusively to Bloomberg's Asia Trade. Very quickly, Kanjun listed here in Hong Kong, 2076 HK. We've given up actually most of the early gains, as much as 5%, 4.8% at one point. JP Morgan initiating coverage here of the stock. Overweight rating is the initial stamp there coming through out of the bank and brokerage. Lots more ahead. This is the China Show.
$11:29 a.m. in Tokyo. Japanese markets are going on break in just a moment here, and we are seeing when it comes to Japanese equities, Nikkei is seeing some more pressure here. We're lower by about 1%. In fact, Topics, though, is still doing okay. Still an intervention watch when it comes to Japan. We're at 161.79 levels, so still some weakness coming through here. But as Claudio Piron from BofA told us there, it seems like dollar-yen could still kind of tread a bit higher here in the next few days or weeks or so. So certainly one thing to watch. 279 for your Japanese 10-year yield. Keep in mind there are going to be some key treasury auctions coming up, the 10 and the 30 years this week. So we'll see how investors' demand picture and what it looks like here when it comes to, of course, all those expectations of Fed rate hikes seem to be changing.
Yeah, and that goes back to the core, should we call it tactical thesis coming through out of Claudio Piron, where he thinks, of course, it's dollar strength through the summer, very short term, hence, of course, higher in dollar yen. But fundamentally, of course, they do expect that to gradually grind lower to about the 150-ish handle is the call they're coming through. Asia, the rest of the region looking like this. Of course, it's a big week in Korea, which we'll get to in a moment here. So you put that together on a benchmark basis. This is what you get across your screens. Yes, still some dollar strength, of course, coming through. S&P futures, a third of 1% to the upside. Within the EM space, let's focus on politics. In fact, it's been a busy weekend. It's been a busy last few hours in Manila, given, of course, today's impeachment trial of the vice president there, Sara Duterte, beginning, of course, today with her political future at stake here. Separately, but certainly related to the story, you have local media also reporting, I think about an hour back, that a court has ordered the arrest of a key ally of her father in the Senate. Let's bring in our Manila Bureau Chief, Manolo Serapio, who's with us right now to talk us through all of the things going on there. Manolo, what's at stake? Let's start with big picture, and then we can get into the sort of details here. What's at stake here in terms of this trial today?
Hi, David. So basically, what's at stake here is the presidential plan of the vice president who has expressed her interest in running for the presidency the next election in 2028. And obviously, the Senate would need 16 senators to vote to convict her, and a conviction would lead to her ouster and perpetual disqualification from public office. But it's interesting what's happening now in the Senate, because from a 24-member chamber, it's now down to 22, because one is detained currently because of corruption charges. The other one is in hiding because of an arrest. He's trying to evade an arrest warrant by the International Criminal Court over alleged charges of crimes against humanity. But yes, this morning, as you mentioned, a third senator who's also allied with Duterte, the anti-graft court just handed down an arrest warrant for him. This was when he showed up at the court this morning to make sure that no arrest warrant is served against him. On Friday, if you may recall, he was charged with plunder. This has to do with undeclared campaign donations during the 2025 midterm elections. So, would it be 16 that's needed to convict the vice president? Because if the overall number in the Senate would go down to 21, that would mean they would just need 14. But obviously, this is all the Senate's call, or maybe even the court, the Supreme Court might have to intervene to sort that out.
That's interesting because we're 3 down now, right? So you mentioned 3 names. I think that's Bato, De La Rosa, Jinggoy Estrada, and of course now Senator Marcoleta. So, okay. So the math should be simple, but it's complicated. Well, it's politics, so I think that's expected. Mm-hmm. How long is this affecting the economy? I think is my core question here.
So obviously the political noise that we've seen escalate from May onwards is not helping. You have an economy that only grew at 2.8%, one of the slowest in the region in the first quarter, and expectations for 2026 are not that bright. And you have a peso that's lost about 4% against the dollar for the year, also not good for the economy with one of the hottest inflation in the region. So this political noise is not helping. The Philippines as was hit by the graft scandal that came out last year. At the same time, for the first quarter and possibly for the rest of the year, there is that impact from the US-Iran war, because as you know, the Philippines gets almost all of its oil from the Middle East. So that's keeping inflation high, that's slowing down not just public spending, but also corporate spending, because some of these companies in the Philippines are being cautious.
All right. Many thank you so much. Manolo Serapio Jr. there, our Manila Bureau Chief, joining us with the latest. In other world news that we're tracking for you, oil and gas shipments through a U.S. protected corridor in the Strait of Hormuz are showing signs of recovering after a series of disruptions over the weekend. But security risks remain elevated, with Western navies warning of ongoing threats. Tanker operators are still navigating the stop-start reopening of Hormuz, with their willingness to transit the strait key to restoring stability in global oil markets. President Trump is expected to meet with Ukrainian leader Volodymyr Zelensky at Wednesday's NATO summit in Turkey. The gathering is set to expose tensions over the U.S. leader's views on Greenland, European defense spending, and the Iran conflict, as well as his inability to end Russia's war as promised. Separately, Ukraine says it attacked 16 power substations in Crimea and other Russian-occupied regions over recent days, while Russia says it struck military sites and infrastructure inside Ukraine. I'll check the markets here right now as we head to that break here, and certainly we're tracking all things, not just when it comes to this World Cup FIFA match that's going on here right now. But then again, we are actually seeing more outperformance in the Hang Seng. There you go. We're seeing 200 points to the upside here this morning. But the rest of Asia,
Korea's now down 2%.
Now, I mean, gosh, it's up and down, really. CSI 300 is also lower there. So certainly continue to watch what goes on as we count out to Samsung earnings tomorrow as well. This is Bloomberg. checking China benchmarks here this morning. It seems like H over A today at least. And so you are seeing at about 0.8% here. What are you lying about? HSTech seems to be driving the gains. So yes, once again, we are seeing a bit of rotation, I guess, from the sort of A to H here today. CSI 300, we're around that 4,800 level here. But yes, steady at least compared to what we're seeing with markets like Korea, for example, which have been going between gains and losses throughout the morning as well. So that is one thing to watch. We also do have some inflation numbers coming through from China this week. To some other major stories that we're following in the tech space as well, a U.S. judge has ordered the Pentagon to give BABA a reprieve from a law that caused all of its lobbyists to drop it as a client. The move comes after a new law targeting entities allegedly aiding China's military took effect last week. It restricts the Defense Department from working with any company represented by lobbyists who also work for blacklisted entities. The case could test Washington's ability to curtail Chinese companies' activities. Hon Hai has reported an earnings beat in the second quarter. Revenue jumped 40% to nearly $80 billion due to demand for AI-related products. The company says shipments of AI racks are expected to maintain momentum, and demand for information and communications technology products is entering peak season. Micron has broken ground on its expansion of its factory in Hiroshima. The $9.3 billion plant is to make high-bandwidth memory chips, crucial for companies such as NVIDIA. The expansion comes as part of a global ramp-up by memory makers to meet demand for AI, with the Japanese government allocating $3 billion to help cover the cost.
Speaking of Japan here, inbound tourism extended its decline in May, hurt by reduced flight capacity. This drop, of course, in Chinese visitors. But Rakuten Travel Exchange CEO James Parks says demand from other markets is actually on the way up, adding that tourist spending continues to rise even as visitor growth starts to level off.
So inbound tours, a macro perspective, China demands dropped 56% year-on-year till May, year to date. But the other nationalities, they make up some gaps. So other nationalities such as Taiwan, coming from our Rakuten Travel, we observe 156% year-on-year growth. So that is recovering some gaps. But it's not just about the tourist number of tourists. Actually, for the revenue perspective or spending perspective, so longer haul destination, the origins, we see more demand. So it will fill the gap and will give us more revenues as well as spending for the overall tourism economies in Japan.
I was going to say, I mean, because when it comes to tourism, it's not necessarily about just the volume and the masses, right? It's also about luxury spending.
Correct.
What sort of shift are we seeing there, and what are you hearing from places where tourists go spend, like hotels?
Yes, we also see 88% of year-on-year growth in the premium hotel bookings, which translate that my comments about the spending, total spending is increasing, although the number of visitors are a little bit flattening compared to last year. Yeah.
Do you expect this to be a more permanent structural change in the composition of tourists into Japan, or is this just a blip because of geopolitical issues?
Yeah, I think we also need to remember that last year we had a Osaka Expo, which was one of the largest some events in Japan. So we expected this kind of some plateau in the demands, but we see that this is a kind of like a game-changing moment that Japan tourism like evolves the next chapter that allowing the more like high-spending travelers coming to Japan. But when the China demands comes in, then they will see another boost of the inbound tours.
Do you think policies such as dual pricing for foreign tourists could be a threat to this boom?
I think we already conducted some research with hotel partners, especially in Tokyo metropolitan area. Some ryokans nearby Tokyo, they are willing to have that kind of dual pricing policy. But hotels in Japan, they are already offering the cheaper price or better price to the inbound travelers at this moment. So I think it depends on the hotel's policy, but I don't think the government will not recommend some certain policy over the tourists. Yeah.
So what are the plans for Rakuten Travel Exchange now?
Our plan is focusing on our globalization, so not only for targeting the nearby countries' regions, we also targeting U.S. travelers, European travelers, all over the world. That's the reason why we see that our growth is better than our overall market. Also, we are focusing on using AI to improve our operations, and also we also focusing on the revenues and high demands, high spending customers. So we see the very good result of the premium hotels now.
There we go. Rakuten Travel Exchange CEO with, of course, Sherry just now. Right, we'll have lots more ahead. This is Bloomberg. Right, looking across markets in the Asia Pacific, as you can see, so we're doing okay actually in the Greater China bit, but the popular AI trades have come under pressure this Monday. I mean, Korea was actually up by about this amount at the start. We're now down the mirror image to the downside right now. Very complex picture of supply and demand, of course, in CapEx, meaning extended positioning. You have several days of selling, of course, within tech, and even weighing on the Taiwan dollar, which is trading for the first time since April above the 32 handle on dollar Taiwan. Anthony Stevens is here with us to give us really the context and what's happening. Why the pressure today?
So we have this transition of markets moving away from macro to micro, and the tech is getting like really granular now. So you see Taiwan and Korea kind of getting pressured as there's reports that NVIDIA's new AI rack architecture is getting delayed. So basically the architecture on putting up a survey. So there's a tweet out from Semi-Analysis amongst other people, and that came out around 3 or 4 hours ago, and that's starting to really weigh on things. Okay. The second thing is positioning, right? Like you see people are lining up to buy this $29 billion ADR. People are quite long this space now, and now they have to wait to see if the fundamentals improve. So Samsung earnings are tomorrow. They will give you an update, but the tech is moving as fast as the fundamentals. People are trying very quickly to solve these problems around memory, around LLMs, but at the same time, it's also a very difficult engineering task to ramp up production. And I think that is one of the reasons this tweet and these technical developments are such a big focus, because investors don't have the visibility. Not everybody has this kind of deep tech knowledge, and we did see that from even the hedge fund results in the first half. Deep tech small fund specialists outperform massively, and we can see already in the second half why that seems to be the case.
We were talking offline about just the implications of this SK Hynix ADR listing here, about the valuation gaps that could potentially be narrowed here. But what needs to happen for that to play out, do you think?
So the first thing that needs to happen is a purely technical thing, right? The purely technical thing is it cannot be fungible.
Yeah.
Otherwise, it's going to trade exactly like Korea.
We don't know yet.
Right.
Whether
Exactly. Right. And they have to. And if it's fungible, it's going to trade exactly like Korea. And maybe Hynix raising the extra money helps them close the gap, but that is not for sure. If it is not fungible, traditionally ADRs in the US have traded at a premium because of a scarcity value. So, for example, TSMC trades in a premium band of around 15 to 25%. So it's quite a high premium because American retail cannot set up an account in Korea or Taiwan. So that's a technical constraint. But that is all an open question. But what ends up happening is people end up being a lot longer Hynix than they were before this deal into this technical setup. And that's one of the reasons that I feel, and I've written around MLive, that Taiwan is looking like a much safer place to play this AI rally, as its volatility is so much lower than Korea. It's more than half Korea's volatility.
Can I look at, since you're talking about Taiwan, can I look at the TSMC premium in the US over the local listing as something that this SK Hynix could track moving forward?
If it is not fungible.
Okay.
So if the two things are completely separate, then those two ADR premiums to watch together will become one of the most important metrics for us waking up in the morning every day as a measure of how bullish people are Asian tech in the US.
Okay.
Right. Anthony, thank you. Anthony Stevens there, our markets reporter, on what to expect this week as well. We're checking when it comes to India, right?
Yep.
Because when we talk about, the unloved, untouched markets here, in respect to Korea and Taiwan, India certainly is front and center. China certainly has been front and center. At least the H-share market is concerned. Even Malaysia, some are emerging as maybe some sort of AI trade. But in India in particular, they have lagged behind because part of this whole narrative, right, that they are actually losing out on this whole AI rally. But there are a growing number of analysts that are seeking India markets as a shelter from volatility and perhaps maybe that sort of AI hedge in the EM complex here. Let's bring in our India equities reporter, Savio Shetty. He's joining us in Mumbai here right now. Savio, it's great to have you. Tell us a bit more. I mean, it's long been this narrative that, if we want to shield ourselves from the volatility of AI, we should tilt to India. That hasn't quite played out just yet, but do you think that there's signs that are aligning now? The stars are aligned now for India?
Yes. I mean, completely. What's happening with India is that all the AI dark clouds finally have some kind of silver lining. Because Indian indexes have had very little exposure to artificial intelligence, the first half of the year was quite bad. India has been underperforming pretty much Asia and the world. But now in the second half, you've had things kind of turning around. If there is certain cracks in the AI bubble globally, which we can see, an extreme volatility, especially in markets like Korea, Taiwan, etc., India suddenly becomes this value here, this absolute, not absolute karma, but the implied volatility currently is at around 13%. We've seen 1% moves for India as lowest compared only to the S&P 500. All in all, it seems that if you're a global portfolio fund manager, India can actually give you a certain sense of defense, a certain sense of calm.
Well, talk to us about relative earnings outlook for India and whether or not that is something that could add to the India bull case.
Yes, it absolutely will. So over the last 2 quarters, we've seen earnings gradually become better. One of the most important keys for our local earnings to outperform over this quarter would probably be the fall in commodity prices. We are a big kind of importer of commodity. And if you have something like a 30-40% fall in crude, all of that really helps margin. So we've had analysts and strategists that we've spoken to extremely bullish on this quarter, and that could be a perfect tailwind that we can have to see that the markets could run.
Savio, thank you. Savio Shetty there, our India equities option reporter joining us out of Mumbai early this morning. So if you're not watching markets, I'm sure you're watching only one more thing that's going on this morning.
The wedding.
The wedding? No. Don't even get me started about Taylor Swift wedding. Let's talk about FIFA.
Starting to push the button.
Let's talk about FIFA. Okay, it's not just about England and Mexico. What's the score now?
3-2. I think about 1 or 2 minutes left in regular time. 89th minute. England's down to 10 men. Yes, let's just see where this goes. I would imagine there's a fair amount of stoppage time on this.
There's a lot of, I guess you could say, controversy around this whole
100%.
U.S. team playing Belgium and what we've been seeing with one particular player here.
Yes,
right?
their star.
Yeah, what's going on there?
So he received a red card
in the previous
match against Bosnia and Herzegovina. Now, if you receive a red card, automatically you're suspended for the next match.
Yeah.
That is not always the case. It's almost always the case, but there are exceptions to that suspension being tabled.
Yeah.
And it's within the discretion of FIFA. I think it's Article 27, if I remember correctly, some of the research I did this morning, that allows FIFA their discretion to suspend
you went deep
the
in your
suspension, which is similar to what happened to Cristiano Ronaldo in the lead up to this World Cup.
Yes.
So he is playing against Belgium, and the winner there, of course, faces, I think, the winner of Spain and Portugal, if I'm not mistaken.
Okay.
How the plot lines have come together for that one.
Yeah, it is, and our reporting is that President Trump made a call to the FIFA president himself. Interesting enough, of course, he did win that FIFA World Prize, or Peace Prize, so certainly there is a lot of interesting sort of
the
questions
strange relationship.
About the relationship around that, and then, of course...
and then the president thanked him.
Yeah, giving Folarin Balogun there. So certainly lots around that. We'll see if he plays, but that match is coming up today, right?
6 p.m.
6 p.m.
Eastern time, so around this time tomorrow.
Certainly seeing a lot of politics around that. Yeah. But yeah, that's going to be interesting to watch. We've been asking you a lot about the football plays everyone's. I think even in Asia Trade, they're like, why is David talking about football?
I think I know.
But we got to give some cred to cred where credit is due, right?
No.
Because former life. We talk about past lives, David. Can we throw up the picture?
Oh no!
Yes, David used to play for the Philippine national team, right? Under 16.
This is AI, folks.
No, it's not.
This is AI.
No, it's not. And I believe you actually gave this picture to Siebes, right? Certainly that's one thing to watch. But yes.
How long ago was this?
Look at the hair. Oh, the youth. Wait, didn't you play for the World Cup qualifying team?
No, so this specific picture, I believe, was for the under 20. I mean, this is what 20
something.
So this is under the under 23s, I think, or this is actually the university games. But this is a former life, so yes. And I have yet to receive a red card, actually. So yes, and I've yet to be suspended.
Oh.
In a FIFA sanctioned event, I have had a few during school days. But yes, anyway. All right. Look, I see. I love how you guys snuck that in.
Yep.
See y'all tomorrow.
Yep.